Good morning. Welcome to IG's early morning call. It's Thursday, 23rd of February. Let's take a look at the headlines as the markets trade in the wake of what appeared to be fairly strong and hawkish minutes last night from the Federal Reserve. Certainly the US dollar is benefiting in terms of trade on this Thursday session. We're now awaiting the second quarter estimate of US GDP. Another big day for earnings here in the UK. We've got numbers out today from Rolls-Royce, Anglo American. We've also got Howdens as well, which I want to take a look at, which is an interesting little stock, I think worth watching, coming up on the left side. And Nvidia shares jumping on earnings late last night. It's all about artificial intelligence. Take a look at volatility. Down for a second day, actually, indicating potentially that we could well see a stronger start to the European markets, which is certainly what appears to be the case on the IG platform at the moment, people bidding these indices up. And you can see, actually, this turnaround in the volatility yesterday. I think part of it was due to some improved outlook in terms of the markets generally. But I think on the whole, I'm going to find it difficult to gain further in terms of really big moves on the upside. It certainly seems to me that the markets are struggling a little bit. This is the FTSE 100 on a 30-minute chart. This vertical dotted black line here was the point at which we closed out yesterday's session. So we are up at the moment at 79.13 by a few points overall on the cash session yesterday. This is the long-term chart. You can see here, despite the fact that we got some attitude towards perhaps maybe taking a little bit more risk, we've got support at 78.76 at the moment, which is the low point we saw yesterday, which coincided with the point we saw the rise as at the 17th of January. And you can see that was the point at which I took this measurement of the band that we've been traveling in there, which is how I got this extension up to the technical top at 84.56 for the FTSE. I still think that's possible. With the markets now looking as though possibly we could well see a slightly stronger open today. It'll be interesting to see how we close out today's session. We'll take a look at some of the earnings in just a few moments' time and see how some of these could contribute to the beginning of today's session in the London markets. German DAX, in fact, was one of the few markets yesterday that saw gains, and you can see at the moment we've got a build on that at the 15,438. Certainly, this is one of the stronger markets across the European session today. Not too far away from recent highs as well for the DAX, but some distance away from the record highs we saw on this market back in November 2021, when we were all the way up here at 16,300. So 15,437, looking for a stronger start, but still some way off the highs. Same sort of message I think we're getting in the French markets. Gains on the 24-hour markets yesterday, although the cash session did close lower on the French trade yesterday. So markets gaining in the back end of yesterday's session. 73.13 is where we are at the moment, building on this slightly stronger, building on the performance we saw yesterday, I should say, looking at the moment at least as though we could well see a slightly stronger start on the French markets. Let's look at what's been happening in the Asia-Pacific markets overnight. Japan has been closed today. It's the Emperor's birthday today, so a day off for the markets there. So we put the Singapore Straits Times in, but you get the message here. We're down across the board. I think slightly stronger inflation expectations in the States. We'll see in just a minute in terms of some of the commentary from the Fed yesterday, steering to a lower market move in the session across the trading day today. ASX 200 down 0.4%. Let's look at the Wall Street close last night. All this coming in the wake of the minutes out from the last Fed meeting, confirming that a solid majority of Fed officials agreed at their last policy meeting on the 1st of Feb to slow the pace of increases in the federal funds rate to a quarter point, but also said the risks of high inflation remained a key factor. Now you can see here the Nasdaq was up 0.13% when all was said and done, but losses on the Dow and the S&P 500. Now this key factor comment, shaping monetary policy and warranted continued hikes in borrowing costs until it was controlled, according to the minutes. This is the quote we got out from this. Almost all participants agreed that it was appropriate to raise the target rate of the federal funds rate to 25 basis points, with many of those saying it would let the Fed better determine the extent of future increases at the time, according to the minutes from the release last night. Last week, two influential non-voting members, James Bullard and Loretta Mester, both confirmed that they would have liked to have seen another 50 basis point move if they had been voting members. And James Bullard saying last week that he felt that there was still room for the Fed to move another 50 basis points at the next meeting later on in March. Now, this is the dollar basket. And you can see yesterday, very strong candle, relatively speaking, on the session. And in fact, closing out at levels they're not seen since the 6th of January. A little bit of money taken off at 104.10. But I think the broad message is that the dollar's move is not over. Let's take a look at what's happening with euro-dollar trade. You can see this move down that we've seen for the euro is all about that stronger US dollar, culminating in that red candle yesterday. A little bit of interest on the session in today's trade. All this coming ahead of the fourth quarter GDP numbers out later on today. Look at that in just a minute. Let's look at what's been happening on the US markets today to take a look at what's going on the NASDAQ, if we can. Just briefly taking a look at that fourth quarter GDP growth rate we're expecting later today. It's only a second estimate, but we're looking for 2.9% growth quarter on quarter. Ahead of that, the NASDAQ, which gained yesterday, has seen a little bit of money taken off the table at the moment at 121.54. But with the Dow and the S&P down yesterday, I think it'd be interesting to see just where things move. And you can see the downward trend that's now building up for the S&P 500. We're just 7 points away from the 4,000 level. It's not just about fourth quarter GDP, it's also about the 1:30 p.m. release of weekly jobless claims in the States later on today. Economists expecting 200,000 new claimants. So that's in amongst the mix on the session in today's trade. Just want to show you this chart as well, which is what's been happening with sterling. Sterling, one of the better performers against the US dollar in the last 36, 72 hours or so. And you can see this move up that we've seen in sterling since the beginning of the session on Tuesday, holding on to pretty much all the gains at 176.67 for sterling against the US dollar. Let's look at what's been happening in some of the corporates. I want to begin first of all with what's going on with Rolls-Royce, one of the stocks worth watching at the start of today's trade. It's certainly been one of the shares of interest over the last couple of years or so because of the downtrend that we've seen because of concerns about the outlook for its aero engine business. Underlying operating profit coming in at 652 million sterling, some 230 odd million higher than this time last year, helped by a better performance in civil aerospace and power systems. Rolls-Royce benefiting from increased use of these large aircraft because of us returning to the air on from the COVID lockdowns. Revenues coming in at 13.5 billion. Let's take a look at the share price chart that we've got here. The drop that we saw during the COVID lockdowns, let me just bring up that drop that we've seen there. That was a drop of 84.83%. Now, timing in the market, of course, is everything. And of course, no one I can't expect has really seen this sort of return since then. We're up 77.9% since the lows that we had back on the 27th of September. Will we see more gains? It's possible today. I think, broadly speaking, Rolls-Royce, the message is that its aero engine business is improving. In the last 4 days, we've seen declines in the stock, closing down at 107.3 today. We've got this rising line of support. We haven't yet hit a new lower low. That drop yesterday was supported by the low point we had back on the 14th of February. So technically speaking, this is still an upward move or an upward trend that we've got in place. I think if you see a drop down to below around about the 200-day moving average down at 87.8 pence, that could be a bit of a concern. MACD is pointing lower, indicating potentially we've got momentum on the downside. But I think fundamentally today, certainly be interesting to see what happens to this stock at the start of today's session, with underlying pre-tax profit up operating profit up 57%. I think Rolls-Royce is looking good potentially for a slight uptick in trade on the session today. Anglo American posting an adjusted EBITDA of 14.5 billion. Earnings per share coming in better than expected at 4.97. We've been looking for $4.85. Revenue falling 15% at 35.12 billion. I think for me, the Anglo American news story today is almost certainly going to be steered by what's been happening in amongst some of the other news headlines of the business. Anglo American says that its Woodsmith project impaired its earnings by a whopping $1.7 billion to extended development schedule and budget designed to deliver maximum returns over a longer life of the assets. So this hasn't performed as many had been hoping for. And I think that we could well see possibly a little bit of a downdraft as a result of that when trade gets underway in the London markets. I want to show you the share price chart. Down over the last couple of days, closing at 30.77. And it has now today closed below the 200-day, or yesterday closing below the 200-day moving average. So that is significant technically. And I think this idea that we've got this impairment announcement this morning by $1.7 billion, that could be a little bit of a headwind to shares at the beginning of today's session. Let's stay on the chart because I want to move on to what's happening with BAE Systems. Now, this stock, I want to show you the long-term chart first of all, because this stock has recently traded at record highs. Looking at what's been happening over the last couple of days, intraday yesterday, we saw a new all-time high print for BAE Systems at 910.7. Revenues up 8.9% to 21.2 billion. Adjusted EBITDA up 5.5%. Dividend up 7.6%. Share repurchasing totaling 800 million in the year. The company says recovering demand, large engine flying hours in civil aerospace grew 35% year on year, higher profit margins, and the company as well has benefited from its defense business, which has seen some really interesting moves in terms of the war in Iraq, in Ukraine, I beg your pardon, and BAE Systems has a lot of intelligence surveillance systems which have benefited from increased use. So I think this is one of the stocks that has benefited from the events in Ukraine. We're watching potentially for a higher start there today, 902.3 at the beginning of today's session. None of these comments I'm making are trade recommendations. They're just points of view on what is otherwise an interesting day. I think the other stock I'm wanting to look for is Howdens at the start of today's trade. Now, this is the kitchen unit and bathroom company. Group revenue 2.3 billion. Now, this was up 10.8%. UK depot revenue is up 10.4%. This is a company that sells direct to the trade. You can't just go in and buy yourself a worktop, but you can do it through builders who are using Howdens in increasing amounts. Profit before tax up 4% to 405 million. 55% up from 2019. The proposed final dividend of 15.9 pence brings the total dividend for the year at 20.6 pence. That's up 5.6% ahead of last year. There's a £50 million share buyback as well announced today. For me, at 7.16, this is the line to break at 7.44.8 for Howdens, and that would take us up to levels not seen since the 3rd of May 2022. So that's where we are for Howdens. One of the little stocks I'm looking at the start of today's session. Let's get back to big cap stocks. The French insurer AXA posted a lower than expected full year earnings number. Net income falling by 8% year on year to 6.7 billion euros in 2022. Now, this missed the 7.25 billion euro consensus of analysts, 15 analysts compiled by Refinitiv. Gross revenues over the year were up 2%. AXA yet raised its 2023 guidance. This is one of the little gleams, I think, of hope or glimmers of hope in the numbers this morning, saying it's now targeting an underlying earnings per share growth above 7%. The previous range had been between 3 and 7%. So that is now confirming the top end of that expectation. This is the share price chart. In the last couple of days, it's disappeared below this rising line of support. But in fact, we're not too far away from the record highs we see in the stock, which were back in February 2022. So not too far away from one-year highs. We'll open at 27.76. The company also announcing a share buyback program of 1.1 billion euros this year and a dividend up 10% from last year. So some aspects of the AXA numbers looking good. Some are a little bit of a disappointment. So I think you've got to pay your money, you take your choice. Same sort of thing at the German reinsurer Munich Re. Now, this posted a 74% rise in net profit in the fourth quarter to 1.5 billion. The 2022 profit rising 3.4 billion, higher than the 3.29 billion that analysts had expected. The company announced yesterday that it would raise its dividend and buy back up to 1 billion euros worth of shares. Now, this is a company that's also been hit by insurance claims. That being said, the insurance market has hardened, and as a result of that, you can see this is the long-term chart for Munich Re. It has risen recently to all-time record highs. Just want to show you where that is, 336 euros. We're going to open at 323.85. On balance, it looks like Munich Re's managed to pull something out of the hat here, despite those large claims for recent hurricanes and damage caused by hurricanes and typhoons around the world, as we see increased concerns about the outlook for weather systems. And of course, these large insurance companies take it on the chin. But what happens is, in the wake of that, they harden rates, and then profitability starts to return again. So I think Munich Re has benefited from that aspect of the insurance business. Now, Nvidia shares jumped almost 10% in extended trade on the IG platform late last night. The chip maker reporting better than expected earnings and also guidance. The group posting an adjusted profit of 88 cents per share for its fourth quarter, beating analyst estimates of 81 cents. Revenue reaching just over $66 billion, compared with analyst estimates of $6 billion itself. Nvidia forecasts first quarter revenues of $6.5 billion, plus or minus 2%, higher than the $6.3 billion anticipated by analysts. And if we look at the share price chart, you can see clearly the reaction that we've had yesterday with this move up. You can see quite clearly the post-market trade, which helped steer gains on the 24-hour markets yesterday for the NASDAQ yesterday, not too far away from recent highs. The stock will open at 9 o'clock this morning, or sessions on the IG platform at $225.99. Artificial intelligence has been the catalyst to this set of earnings. Nvidia chief executive said the use of chips now to power AI services like chatbots had gone through the roof in the last 60 days. And this is where Nvidia really plays into the opportunities in this market. Analysts believe that Nvidia, more than any other company, is best positioned to benefit from such increased costs, as it dominates roughly 80% of the market for graphics processing units, or GPUs, used to speed up artificial intelligence work. So where do we go from here? Well, clearly this 113% rise all the way up to the recent highs on this market at $230.46 is the area to break. Nvidia did very well during the lockdowns. Since then, there has been concerns about the outlook, but I think artificial intelligence, where it is centered, is going to be the future for this stock and also for the tech sector generally. Let's now switch on to what's coming out later on today. Moderna, the drug company, is due to report earnings, and it's a company which has been centered around the COVID spread, and it's benefited so well from that. But sales are likely to have moderated a little bit because as we've dealt with the COVID outbreak. Today, Moderna is expected to report earnings of $4.70 a share on revenues of just over $5 billion. In the same quarter this time last year, it posted earnings per share of $11.29 and revenues of $7.2 billion. It is an all-session stock on the IG platform, means that you can trade this when we get the numbers out. Moderna rose 2,700% from pre-COVID up to the record highs, and then it's lost three-quarters of that value, down to the lows that we had back in September last year. Since then, there's been a bit of interest, and we're currently resting at the 200-day moving average. Good earnings out today. You go long on this with a stop below yesterday's low point in the candle, around about $155. We're opening at 162.85 at the start of today's all sessions trade at 9 o'clock in the morning. I want to take a look at what's been happening in other areas of the market. US crude, yesterday, some really hefty declines. Inventories increased substantially last week, according to the API. Crude oil stocks rising by nearly 10 million barrels last week. Gasoline stockpiles rising by 900,000 barrels, and distillates also rising. And I think this is really what's been spooking the market recently, is extra crude oil on the market. And you can see, if you look at the chart, yesterday we saw a really hefty decline. And today we are biting a little bit onto that. But the broad sweep of things is concerns about the outlook. And I think it's going back to this interest rate story as well. The further interest rates go up, the more likely it is that demand will suffer at the hands of lower growth. And that's really what's been worrying the markets as things there stand at the moment. Spot gold declines yesterday, taking us below this line of support I was talking about yesterday in the early morning call at 1833. My new price target is down here, which coincides with the 200-day moving average at 1776. 1774 was the low point we had back on the 16th of December. And I think if you look at the direction of travel here, because we've closed below this line ahead here, which goes back historically, it's one of these lines I think I've had in the chart for a long while ago. It's still there from these this area of resistance we had back in September 2021. That's why we got this here. So it is a significant move. That, as I say, given this trend is in place, that's the next price target to watch out for, down at 1774. That's it. We're back at 10:30. Tracking the markets. Hope you can join us there for that. But do watch out for those stocks at the start of today's trade. Rolls-Royce. We've got numbers as well from Hayes. We've got numbers as well to watch out for from Howdens. one of the stocks I'm interested in at the start of today's session. That's it. Back at 10:30, as I said, with Charlie.